Hi. Now, even before I tell you as to what is contained in this course or the syllabus of the course, I must explain to you the concept of fundamental analysis and the importance of financial statements in the process of fundamental analysis. Because financial statements ultimately is nothing but all about fundamental analysis. Let me explain to you in this manner. Let us say that I have about $10,000 or maybe rupees or reals or pounds or yen, whatever, and I want to deploy that money in the stock market. See, I'm using the word deploy, alright? Now, if I have to deploy my money, I can either be a trader and trade with that money, or I can be an investor and invest that money. There is a difference between trading and investing. What is trading? What is investing? That we have studied in our basic course that was about the stock market investment and trading for absolute beginners. We have done that. All right. So, if I am a trader and if I want to trade with my money, then I should know technical analysis. Technical analysis would involve learning the candlestick charts and patterns and also monitoring various technical indicators and signals. But if I want to be an investor and if I want to invest my money for a long term, then I should know fundamental analysis. And fundamental analysis would involve doing industry analysis as the first step. Then I'll have to do company analysis, and thereafter the most important part, that is the financial statement analysis. And within financial statement analysis, I'll have to do some ratio analysis. Now in this course we are not talking about trading or the technical analysis, so this is out. What we are talking about is the financial statements, and financial statements are all about fundamental analysis. All right. So if I have to do fundamental analysis, if I have to invest my money, then the first thing that I do is industry analysis. Now what is this industry analysis? It is primarily asking or answering myself as to which industry should I invest in. There are various industries. Should I invest in a capital goods industry or oil and gas industry or maybe infrastructure? Maybe I invest in chemical industry, food processing industry, or maybe information technology or metals, minings, or maybe automobiles. Which company should I invest in? Now, you see, the answer will depend upon which industry has better growth prospects. I would like to invest in an industry which has got better growth prospects, and the industry where the labor problems are less, and also the one where the government is favorable. The government is likely to favor some industries in the future, so I would like to invest in those industries. And then I would also consider whether the industry is dependent on demand pull inflation or cost push inflation. This also we have studied in the first course, which was about the fundamentals and concepts of finance, investment, and business. So we know this thing, all right? And there are many other things which are all subjective knowledge. These, the knowledge which I am talking about, this is all subjective knowledge and does not require any formal education. This you will be able to know from the news, from understanding, the general economics and general knowledge. So Let us say that I have identified three industries. Let us say these three industries I have identified for investing my money. And first, I want to invest in an automobile industry. So, doing the industry analysis, I have homed on to these three industries, and among them, the top one, first I want to invest in automobile industry. Now, having selected the industry, the next thing which I will do is do the company analysis. All right. What is meant by company analysis? Now you see, in my country there are 10 automobile companies. Which one should I invest in? Out of these 10, which one should I select? That process is called as the company analysis. That means I will be analyzing the companies and deciding which one is the best for me. But in this process, I would find it easier to do a rejection process rather than a selection process. Let me explain this. What I would do is I would reject all those companies, all those automobile companies which do not have a good spoken reputation. Those companies about whom the people do not speak good, those companies I will straight away reject. Then I will also reject all those companies which have a spoiled brand name. You see, sometimes the brand name is spoiled. You talk about a particular brand and people say, oh, that brand. No, no, don't purchase those vehicles. They are not good. So if somebody has developed such a reputation, then I would not like to invest in that company. Then I will also reject those companies which have got only a small market share. Then I will also reject those companies where there are frequent customer complaints. And the customer complaints is a common phenomena in some particular companies. So I would not like to invest in those companies. But let us say after doing the company analysis, out of these 10 companies which are there in my country, I would reject 4 of them straight away, and I have shortlisted 6 out of them. Now from these 6, I will have to choose which one is the best for my investment. Now remember, I am investing my hard earned money. If I am purchasing even 500 shares of a particular company, and let us say if the company's capital structure comprises of 500 million shares, out of these 500 million shares, if I am purchasing 500 shares, then I become 500 divided by 5 million, that is 0.0001% owner of that company. Remember, because I am investing, I become a stakeholder in that company. And so I will be very, very cautious and I will look at the financial health of that company. Now, having done the industry analysis, the company analysis, now I will read, understand, and analyze the financial statements of each of those 6 companies which I have shortlisted. And I will do the analysis not just for the current year, but for the past 5 years. Now, what are the financial statements? You see, there are basically 3 financial statements: the balance sheet, the profit and loss statement, and the cash flow statement. These are the 3 financial statements. The balance sheet will tell me how much wealth the company has as on date. What is the status of the company's wealth today? And it will also tell me, by reading the past 5 years balance sheet, it will tell me whether the company's wealth has increased, decreased, or remained static over the years. And then the profit and loss statement will tell me whether the company is running in profit or is it running in loss. And if it is running in profit, has the profit increased, decreased, or remained static over the past years? And then when I study the cash flow statement, the cash flow statement will tell me where the money is coming from and where the money is going. Whether the money is coming into the company from its core business, if the company is manufacturing automobiles, is the money coming in through the sales of automobiles, or has the money come in through borrowings by taking loans or by selling the assets, selling the plant machinery of the company? How has the money come in? The company may be running in profit, but is the company properly, judiciously, wisely utilizing the money or not? That also will be revealed by the cash flow statements. All right. And then, having studied the balance sheet, the profit and loss statement, and the cash flow statement, now I will do some ratio analysis. All right. The ratio analysis will be done to determine out of those 6 companies. Individually, I have done their analysis of the financial statements, but to compare among themselves and decide which is better than the other, I have to do the ratio analysis. How do they compare with each other? Which one is better valued today and which one is likely to be better valued in the future? Which one is growing faster than the other? Now you see, some company may be good today, they may be giving huge profits today, but will they continue giving the same profit later? Some other company may not be giving profits today, but is it possible that they will give huge profits tomorrow? Consider an example that there is a tree laden with fruits. It is giving good fruits today, but it is in the process of dying down. Maybe in a couple of years, the tree will die down and will not be giving any fruits. But today, it is fully laden with fruits. On the other hand, there is a plant which is not giving fruits today, but in a couple of years, it will start giving good harvest and it will continue giving harvest year after year. So, where should I invest my money? In a tree which is giving profits today but likely to die down soon, or maybe in a plant which is not giving fruits today but will soon start giving good harvest? So that is what I will decide by doing the ratio analysis. And then I will also come to know which company is more risky than the other. And some more answers I will get from the ratio analysis. On my ratio analysis, on the basis of my ratio analysis, I may discard 3 out of the 6 companies. I have been doing this for 6 companies. So after my analysis, probably I may discard 3 of them, and the remaining 3 I may prioritize them as number 1 company, number 2 company, and number 3 company. And then I may invest 50% of my money in number 1 company, maybe 30% in number 2, maybe 20% in number 3, or maybe I will invest the entire amount in the number 1 company itself. It depends. So that is the logical process we all follow to select a good stock or a good share. But please remember that this course, or rather in this course, we will not be doing industry analysis, we will not be doing company analysis, because both of these are subjective and they require general knowledge. These things do not require any formalized courses. In this course, what we will be doing is only the financial statement analysis, and we will do that in detail. Financial statement analysis is an objective study. It is based on facts and figures. We will see that during the course. And certainly it requires a formalized and a structured course. And that is why I have prepared this course. One more thing which you must remember is that you need to take a holistic view. You see, in this course, during the process of the course, I will be talking about various things like, the working capital cycle, the reserves and surplus, the equity, the debt equity ratio, the top line, the bottom line, all these things. You may wonder as to why I am talking about all those things in the course. How are they concerned with buying and selling the shares? But please remember that to get a holistic view or a complete idea of fundamental analysis and the financial statements, you must see all those things. You must know all those things. Do not try to take a shortcut. And then I must tell you that this is not a one-time effort. It is not like you have done the financial statement analysis and then you purchase shares worth $10,000 and then you go to sleep. It doesn't happen like that. Periodically, you will have to monitor every 6 months, 9 months, or maybe once in a year. You will have to monitor, you will have to review, and you will have to see that the decisions which you have taken, the analysis which you have done, whether that still holds good or things have changed and you need to deviate or you need to correct your course of action. So therefore, you have to keep repeating the financial statement analysis at periodic intervals, maybe 6 months. And then you see the results of what you do will be seen after a couple of years. You do the fundamental analysis, you do the financial statement analysis today, and immediately the result will not be seen. The result will be seen after a couple of years when the share price increases, the growth take place, and that is the time when you will come to know whether your analysis was correct or not. And you will be doing this analysis not only for yourself but maybe for your friends and family. So you must do the analysis with due deliberation so that a couple of years later those people should come back and tell you that the analysis which you had done was good and the shares which they have purchased have given them good profits based on your analysis. So I hope I have made myself clear about the concept of fundamental analysis and how financial statement analysis is so important in fundamental analysis. In the next lesson, I will give you a preview of what all is contained in this course. All right.